is good, YouTube? It is your boy Sam, and I am back with another video. So today has been an extremely long day. I'm very tired, but I'm going to remain consistent, and I'm going to bring you guys another banger. Okay, so this video is not going to have any edits at all. We're just going to push right through it. I will use some props, so for my visual learners, you can pretty much see what I'm doing if you do not understand my verbal explanation. Okay, so the question is, what is a candlestick chart? A candlestick chart is a type of chart that you could use for stocks as well as other traded funds where it captures a specific time frame. For example, you have your 1 minute candlestick, your 5 minute candlestick, your 15-minute candlestick, your 30-minute candlestick, your 1 hour candlestick, your 1 day candlestick or 4 hour candlestick, your 1 week candlestick, and so on. You can pretty much adjust it to how you want, and you can have specific candlestick time frames within a specific range. For example, you could look at a 1 week chart but have a 4 hour candlestick to where each candle represents what has happened over a 4 hour period, right? So for the sake of this example, we're going to use the 1 day, 1 minute candlestick chart just so we could get a good understanding on some basic fundamentals down on how these things work. Okay, so if you have a 1 day chart, it basically shows you what a stock has done in a 1 day time frame. And if you have a 1 minute candlestick, what it's going to show you is basically what the stock has done within each minute with a visual representation by way of a candlestick. So how the candlestick works, right? Let's say it's market open 0930, right? And for the sake of this example, let's just say there's no price movement whatsoever. The market opens and bam, we're going to use Apple, for example. I like using Apple in these examples. No, this is not an Apple sponsorship. It's just one of those very common stocks that is easy to remember. So we're going to go with that, right? So trading Apple is, let's say, trading at $100 a share. It is 0930 and bam, the market opens, but there isn't much price movement. What that's going to look like is a dash, okay? At 0930, the first candlestick starts as a dash. This is going to be the open price, the price that the candlestick started at on that minute, which is $100. If the stock goes up to $101, bam. Well, actually, it's not necessarily $101 if it goes up at all. So if it's $100.01, it's going to show you, bam, one movement up in the green position, or the green color, I should say, in the up position, as it is relative to where that candlestick started. Okay, so follow with me, guys, right? Sorry about that. All right, had a little camera malfunction. We're gonna keep that in there, right? So 0930 candlestick starts at $100 a share. It goes up to $100.01, and the up direction is going to be green for that specific time period because it is higher than what it opened at. Doesn't necessarily mean the candlestick will remain green, because if it goes down below the price it opened at, let's say $99.99, right, it's going to be red because it opened at $100 and now it is down relative to where it opened at. What's going to determine the final color of that candlestick is at the end of that minute, right? When the new candlestick forms, it's going to show you basically the range in which the price went within the last minute and what it opened at, what it closed at, the highest point it reached, and the lowest point it reached. Okay, so let me expand on that a bit. Back to the first candlestick. Let's say it opens up at $100, right? It goes up 1 cent to $100.01, or it goes all the way up to, I don't know, $100.20. So now you have a nice green candlestick. What's going to happen is, as the price retracts, it's going to leave a wick, right? Which is that stick looking thing that can be at the top of a candlestick or at the bottom of a candlestick. And it's basically just showing you the range in which the price has gone within that minute, right? So what's going to happen is once it retracts, if it still remains above the open price, the candlestick will still be green, and you'll see a wick showing you the footprints essentially of where that price action was at maybe a few seconds ago, right? If it dips below that open price, it now turns red, but the wick remains there because it's a footprint, kind of like walking in the snow, right? You could kind of see how far you've gone based off of the footprints you leave behind. It's pretty much the same thing, right? And what's going to happen is on the next minute, as soon as it hits, 9:31, wherever that price is at that current moment, whether it's above, below the previous candlestick, it does not matter. That is essentially where that dash would start. And remember, it's only going to show as a dash if there's no price movement, right? So once it at a different price, let's say at 0931, it is at 99.98. What that means is the previous candle is going to be red because it started at 100 and it closed at 99.98 and opened at a lower price relative to the other one, and that is essentially where that open is going to be for that next candlestick. If it continues to go down, it will be a red candlestick, right? And if it closes below where it started, it will remain red. If it ends up going back up and it closes above it, it will be green. And essentially, that's pretty much how candlestick charts work. I'm going to draw it out for you using my props here. I like using these napkins as props. It's just super easy for my visual learners. Okay, so we're going to start out with green, and I'll make sure the candlestick closes above the price of the open at, so the candle will remain green, but just to give you an idea of what that looks like. Okay, so 0930, Apple is trading at $100. Let's say this is $100, right? The moment this goes up to $100.01, it is now green, just like this, right? Can you see that? Right? If it goes up to, let's say, $100.02, but it comes back down to $100.01, it's going to leave a wick as such, and you have $100.02, just like this. Okay, if it decides to come all the way back down, and let's say it comes down to, I don't know, 99.98, which is right here, 99.98, it'll look like this, but it would be red at this point because it is below the price it started at. But let's say it comes back up to $100.01, which is right here. This is what the candlestick would look like. Okay, so now it is 0930. Now let's just say it's 0931. Let's say it's 0931, and it's kind of pinkish color, but there's going to be my red. And at 0931, on that mark, the price at Apple is at, I don't know, let's say 99.98, right? So 99.98 is down here. So it essentially opened down here as such, right? If it comes back up to, let's say, $100.01, if it comes back up, it would look like this, but it would be green because it's above the opening price at 931, right? But if it comes back down, let's say to 99.97, let's say there's 99.97, right? It would be essentially like this, okay? Now, later on down the road, we will get into more details of what some of these specific candles are called, because for my advanced traders out there, if you notice, a lot of companies and, your retail traders like to trade following specific patterns. However, they use support lines, resistance lines, and different kind of indicators, which we'll get into later on down the line. But in a nutshell, this is pretty much what a candlestick looks like and pretty much how it works. Now, if you notice, when you zoom out of candlestick charts, you could kind of see a picture or a pattern, kind of like, you know, what that price movement is doing or looking like. With that, you can better predict what the stock is doing, and it doesn't look so random and scattered as somebody who does not know what a candlestick chart is. So that's pretty much it. Gonna keep the video short. I didn't want to feed you guys too much, right? We're just starting out the channel, so make sure you like, comment, subscribe, and share. And later on down the line, as I get feedback and I understand more so, you know, what the audience want and what they want me to speak about specifically, then I could deliver that to you. Appreciate the support.